On today's episode, we're discussing rate changes with one of RBC's top mortgage advisors.
Welcome back to our channel, guys. I'm Justin. This is Brandy from Team Grande at Remax Escarpment. Today we have a super special guest, Katie Morrison from RBC. She's a mortgage advisor, one of the best in the business, been doing it for 23 years. Katie, we're so happy to have you on the show.
Thanks so much for having me, guys. This is super exciting.
Yeah, I mean, last time we were together, actually, I remember we filmed a video one time, like, I don't even know how many years ago it was. I want to mention this because I think I haven't even told you this. Yeah. It was like on a cell phone in the office, the Team Grande office.
Yep.
And I remember the cameras over there, and we had to like yell at it. But what do you think of the production value now?
What an amazing space. You guys have really like moved on up, I have to say.
It's a lot different than the 2-minute phone camera setup.
Yeah, and I actually don't even think I had a chair last time. I think I had to stand. And now I have armrests and everything.
That's so. Well, I'm glad to have you back on this proper format.
I'm happy to be here. Thanks, guys.
Awesome. So let's jump right into it. So, Katie, what are your expectations this year in terms of mortgage rates? What do you guys see happening?
You know what? I feel like this is all we've been talking about for the last couple of months anyways, but
No kidding.
What a ride. Like, I honestly have never, I've been with RBC for 23 years. I've never seen so many rate increases in such a short period of time. So, you know, it's no wonder that it's the topic of conversation for everyone right now.
In 23 years.
Yeah,
It's crazy.
It's been crazy, and just trying to keep on top of it and field all the calls that come in every time it happens. You know, and the media definitely, you know, shoves it in everybody's face, and you know, it's a good thing. It's good that people are aware of what's happening, and you know, they're able to kind of see what the projections are from the government, but I feel like there's a lot of scaring going on too. So it's definitely making people nervous. I think we've seen the worst of it though. Like, I don't think that...
Do you think so?
Yeah, I don't think that we'll see too many more. There will be a couple of additional increases, but what I typically use to try and gauge where I think the rates will be is our builder pricing. So, you know, we'll talk about that, but it is a good way for me to kind of get an idea of what RBC's forecasting down the road. Because if we can hold a cap rate on a new construction build, you know, for 3 years, and that 3-year rate is capped at 5.25, then that tells me that's what the bank thinks the rates will look like in 3 years. So, you know, we're at just over 4% now. If in 3 years the rates are 5%, that's not bad.
Yeah.
Really isn't. I mean, still relatively low in the grand scheme of things, I guess, right? You were mentioning before the show how your first interest rate was what, 9%?
9%, you know, and that was in like late 2002, early 2003, and that was my staff rate.
Yeah.
So like, big discount, you know? And I just think that we've been so low for so long. This is really just, it's shocking to a lot of people.
I feel like our generation, it's not that we're that young, but I feel like our generation doesn't fully understand what a larger rate is because we haven't been around long enough to see it.
My highest has only been 3.45. That's the highest my rate's ever been that I've had.
Right.
But I was always variable, so.
Yeah.
But still.
Well, and there's always that too, right? Back and forth. You know, I get that question constantly. Do I go variable? Do I stay variable? When do we lock in? When's the right time? There's no right answer. I think honestly what it comes down to is risk tolerance. It's the same as when you're putting together an investment portfolio. Do you want to be in a GIC or you want to be in mutual funds? What's your risk tolerance? And how much time do you have to pay attention to what's going on? Some people don't pay attention to any of this and they don't want to.
Right.
You need to be in a fixed
It's like
rate
stocks,
then.
whether you want to be right on top of it or not.
You want to be in a stock or you want to be in a GIC?
Yeah.
GIC, you lock it and forget it, right?
That's so true, because I know a lot of people, because we're in the industry, so we're always talking about rates, we're always talking about housing prices and all that, but the average person that bought a home, raising a family that has no intentions of moving or anything, they're not even thinking of it, right? Like, they're not paying attention, so that's where, you know, that variable is, okay, I know what my payment is every month, and I can just kind of, you know, set it and forget it,
Yeah.
So like, how does renewing your mortgage work if the rates are higher? when you first locked it in?
So on a renewal, if you are going back to your same lender and your mortgage is up for renewal, you're essentially just picking your new term at that time. And at that time, you have the opportunity to re-extend your amortization if you want to. So let's say you're coming out of an interest rate of 2.89% and now the rates are 4%. Well, this is obviously going to impact your mortgage payment because you're trying to stay on that amortization schedule that you set up in the beginning. But if that payment's too high, you have the option to stretch that amortization back. And in most cases, you can go back to 30 years. So is that ideal if your goal is to pay your home off? No. But if it's a cash flow issue, you know, things happen over 5 years. You might buy a house, come up for renewal 5 years later. Well, now maybe somebody's on maternity leave, or maybe somebody's had a job change. The cash flow just isn't there to support it. So you can re-extend the amortization. Lower those payments back down.
Would you typically recommend starting at a 25-year term then? So you have that leeway?
Well, you would always have that leeway, whether you started or not. So if you came and took a 20-year amortization when you bought your house because life was the way it was at that time, and then you come up for renewal in 5 years and money's tight, you still have the option to go back to 30 years.
Okay.
Okay, so it doesn't mean you have to take it up front. 30 years is only available if you're purchasing your home with 20% down or more, and if you're purchasing with less, it's 25 years maximum.
Yeah, gotcha.
Yeah.
And then talking about closing on a home, I know that right now a lot of people have pre-approvals in place from when the rates were lower. What kind of window do those pre-approvals last? And then do you have to purchase in that pre-approval time or close in that pre-approval time? Like, what are the terms around that?
That's a really good question, and we get asked that all the time. So when you lock in your rate and you have your pre-approval in place with your lender, typically you're locked in for 120 days. So you have 4 months to secure a property and close to get that interest rate. So no, you cannot have an accepted offer that's outside of that commitment period. You would be reset to the current rates.
Yeah,
you have to close within that 120-day period.
Yeah, let's really drive that home. You have to have it all said and done, search, close, all of it within your 4 months to keep that rate.
Key in hand, take possession. So if you have a pre-approval sitting there right now and you've got, 60 days left on it before it's expiring, if you can, it would be in your best interest to secure something and try and close on it quickly. Otherwise, you might find, your rate's almost doubling when we recommit you.
Wow. Jeez, and you know what? That's I guess we're not starting to see that now, because I guess end of April would be the cutoff for anybody kind of early January. I guess end of May, right?
That's right.
Would be that cutoff.
Yeah.
So.
Yeah,
awesome.
We're really up until probably end of May, beginning of June, and then we'll see everyone kind of in the higher interest rate.
So Katie, you've mentioned cap rates on new construction. Can you go into that a little bit for us?
Yeah, of course. So this is a really great program that I almost feel like doesn't get enough attention. RBC offers our builder purchase program. And so what that means is if you're purchasing new construction from a builder's site, so this is not building your own home, this is going to a builder's site, purchasing your new build through someone like, Lissani, DeSantis, whoever, you're going to get that contract and you're going to have, 10 business days to get your conditions met. So your conditions are going to be your financing approval. Most builders want a firm approval now because of the market conditions. Lawyer review and your deposit structure in. So RBC will take that offer to purchase and we will adjudicate that file within that 10 business day period. We offer firm approval, meaning once I come back to you and say, okay, congratulations, you're firm approved, you can satisfy your conditions with your builder, we don't do anything else.
That's it.
Okay, so even if your closing date is 2 years away, 3 years away, up to 4 years away, we guarantee the approval and we cap your interest rate for you.
Okay.
So what capping the rate means is we look at it and say, okay, Mr. Client, you're closing 3 years from now. Here's the cap rate that we will put in place for you. The cap rate's always going to be higher than today's market rates. But what it does is it gives the buyer a worst case scenario rate-wise so that they know even if rates went through the roof over the next 3 years, and I've capped you at 5.25%, you can budget, you have the peace of mind in knowing that that mortgage will never be higher than 5.25. What happens though is 90 days before you close, we do a sweep of the rates. We look at the current market rates, and if they're lower than your cap rate, we drop you down to the market rate. But if they're higher, you get the cap rate.
Yeah.
So it really allows
It's like a security blanket.
Yeah, to budget and know this is what my housing cost is going to look like. The other big important piece of this is we do our appraisal within the 10 business days. So we're appraising that property that you purchased, even though there's nothing there but dirt. Yeah. We're appraising it based on today's market conditions. So a lot of people worry, what if the market does crash? What if I paid $900,000 for this new construction home and in 3 years my lender wants to appraise it and now it's dropped to 802? You're on the hook for that shortfall. Right. But with RBC, we do our appraisal when you buy it based on today's conditions, and we don't reappraise it again.
That's really comforting.
Yes.
Yeah.
That's huge. That's a phenomenal program.
Yeah.
Like, a lot of people should really be taking advantage of that because you don't know what's going to happen, especially if you're purchasing new build now. If the rates are we know the rates are going up, having that secure blanket, like knowing what your worst case scenario is massive.
Yeah. And that's exclusive with RBC?
Yes, it is. So there are other banks that will offer somewhat of a firm approval, but they do typically still do an appraisal closer to closing, and they do still verify income again closer to closing.
Okay.
So again, think about what happens in 3 years' time. If anything's
you
changed
could lose your
in
job,
your life.
anything.
That's what I was just going to say that. So the guaranteed approval, if you lose your job, what happens?
Right. So we don't only offer firm approval on new construction, we offer firm approval for everybody. So resale, it takes care of everything. So what firm approval means is we've done your appraisal, we've verified your income, we've pulled your credit, and then we don't do it again. Once we give you that RBC firm approval letter, you could essentially quit your job, buy a Lamborghini.
I was going to say that.
Please don't. Please don't.
I was going to say, get the approval. Oh, no, I'm going to go get the $100,000 truck.
How many times though do you have clients that say to you, I'm going to go to the Brick and buy all new furniture and put it on the don't pay for a year card.
Yeah.
And you guys are like, whoa, don't do that. It doesn't matter with us because we don't recheck their credit and we're not going to pull the deal. Once we tell you
it's a crazy
and your
level
client,
of trust.
Approved.
That is a massive, massive program. That's that's amazing that you guys offer that.
Yeah, I love that.
So do you guys have any right now? What are we? April 21st, 2022. Do you have any promos currently running?
We do. We have a couple. So we've got the purchase promotion on right now. So it's a tiered promotion. It's a cash incentive offer. So depending on the size of your mortgage, RBC will dump a lump sum of cash into an RBC bank account within 2 weeks of closing. It's anywhere from $500 up to $3,100.
Nice. I cover a couple months mortgage payments.
Yeah, exactly. Yeah. Or help you with closing costs or anything else you want to do.
Then you can buy the furniture.
Then you can buy your furniture. Yeah. And then we do have a switch promotion on as well. So same thing. Anyone who's not currently with RBC for their mortgage, we will move your mortgage over. We'll pay all your legal fees, your discharge fee, your appraisal fee, and we'll give you cash on closing.
Wow.
That's running till June 30th.
Wow, that's amazing.
Yeah. Good.
Especially since closing costs can run you anywhere from to $10,000.
It's that land transfer tax now with the average home price. The land transfer tax is ridiculous. Like,
and the amount of people that don't factor that in when they're thinking of their purchase.
Yeah, it's a good idea for another episode.
Yeah.
Go over closing costs.
I love it.
That's awesome. Well, Katie, thanks so much for finally joining us.
Thanks, guys. I'm so happy to be here. I feel like I had to beg. But
she wasn't supposed to say that. That's okay.
No, you never have to beg. You're always welcome to be on the show.
Yeah. I love it.
No.
Thanks so much.
Yeah, thanks for joining us, guys. Thanks again for tuning in. Be sure, if you're watching on YouTube, to like, comment, subscribe. Hit that little bell in the top corner so you get notified every time we have a new episode. We look forward to bringing you guys new content every week, and we'll talk to you again next week.
See you later.
Bye.